So I have gotten a ton of requests to discuss these videos saying you need 100 or even 1,000 shares of SOFI. Now, I know we've discussed this with other stocks in the past, but it's even more dangerous when talking about a stock like SOFI. So I figured we kind of break them all down, kind of give you guys the hard truth about these type narratives and these type videos, especially when it comes to SOFI stock. And we'll kind of go through the goods and the bads and everything else so you can make the best decision for your investing moving forward. Just make sure you like the video if you like getting the truth without the hype. So let's talk about the problems I saw with this video first, then we'll jump right into the goods as well, because there's actually some really awesome things in here, and the hard truth in regards to owning 1,000 shares of SOFI stock, and it's not going to be what you think, guys, so make sure you stick around for that. So first up, it unintentionally encourages lottery investing. Now, let me kind of define lottery investing for you guys, for those of you guys that don't know, so it kind of makes a little bit more sense. It's basically saying, hey, I'm going to buy 100 shares or 1,000 shares of SOFI, and I'm just going to put my feet up on the beach, and it's just going to make me millions in the future. That's just how investing works. And nothing could be further from the truth, guys. I understand everybody puts together their pretty models and they, make projections out to 2030, 2040, 2050, stuff like that. And it gives you a false sense of investing and how investing actually works in the end. I don't know a single investor that just put $1,000 into the market or $10,000 into the market or pick whatever number you want, just become millionaires later. I'm sure that they exist, but the vast majority, every single one that I've ever known, and I've met a lot of millionaires through stock market investing, have all done it the exact same way, through consistently investing in the market with new money. And along the way, you happen to hit a stock like an NVIDIA that goes up 100,000%. Maybe you didn't catch it, obviously, at the bottom of that. But hey, even if you caught it, 3/4 of the way there, you're still up tens of thousands of percent on those buys. So sure, you may end up in a scenario where, $10,000 turns into $1 million later on. But it's not based upon just, I did it once and I put my feet up and that's the stock I'm going with, YOLO all on one. It happened through consistent investing, and along the way, something like that amongst all the different stocks that you've done created that sort of scenario there, but they already built a vast majority of wealth a completely different way there. So when I think about this, that's lottery investing, and that's what these type videos, to me, was the impression I got, was all I need to do to be a successful investor is buy 100 shares of this or 1,000 shares of that, and I'm going to be wealthy. Don't worry about anything else. And unfortunately, that's not the truth when in regards to actual investing long-term. That is lottery investing, and you're going to lose long-term. Consistency is the key during good markets, during bad markets, bear markets, bull markets, whatever. Just consistently investing is the key to all that sort of stuff. Not trading in and out, not all these crazy strategies that everybody out there pitches. Just consistently buying great stocks when they're on a discount is all you need to do to be a successful investor long term. Just a simple DCA statistically crushes almost every other strategy, and definitely every single strategy that Wall Street uses. So when I hear something like just buy 100 shares or 1,000 shares and put your feet up and sit on the beach and earn your millions, I know that's probably not the most prudent move. Number two, neglects any notion of valuation or due diligence. Now, let me be clear here about due diligence. I'm going to assume that when these folks made these videos, they were assuming that you've already done due diligence on the company. But at no point in time did they say that. There was maybe one that did, that I can remember. The vast majority of them that I saw did not say that. So that's kind of the first piece there. The second piece is not a single one, and I probably didn't see them all, but out of the ones that were sent to me, I did not see a single one that said, hey, do a valuation and make sure you're, valuing the stock properly before you go and buy your shares. Because I can assure you, those folks that own 1,000 shares of SOFI at, almost $20 per share, whenever it was riding really, really high, is going to have a very different outcome over the long term in regards to all those projections and everything else than the person who has a $5 average in SOFI, because they bought based upon valuation, not based upon hype and everything else. But I didn't really see that mentioned anywhere, but it's something you have to understand. When you understand valuation, that's how you end up in these type scenarios where your valuation matters in regards to you owning 100 shares or 1,000 shares and having it perform very, very well for you in the future. Now, I'm not saying if you own them at 20, they can't perform well for you in the future, but you better have been averaging down there in this time and obviously own a lot more shares than that. You see very quickly how the strategy has to shift when you change what your actual valuation for the stock is and what you actually pay for the stock, more importantly, when you're using these types of scenarios. And that's something I thought the video should have addressed, and they didn't address. So I wanted to make sure I address it right here, that valuation is critical to this strategy even having a chance of remotely being right. And one of the biggest discounts ever from my group expires this weekend, where you learn exactly how to do a valuation. You can see all my buy and sell alerts on SOFI in real time, see my complete watch list with price targets that include SOFI, be able to ask me any questions you want about any stock you have out there, be a part of the best 6, 7, and 8 figure Discord out there, be a part of our free coaching to help further your education in there. Obviously, take the 5 courses for free. Guys, there's so much involved in this. Don't miss out on it. Again, one of the biggest discounts ever expires this weekend, so make sure you get your spots before the sale expires. And number 3 would be projections. The projections on every video sent to me were, if I'm being honest here, they were not well done at all. Now, I'm not going to call it names, not going to call anybody else out there, but I saw what I would call rookie investor mistakes on things like saying, well, if they grow top line this much, the stock price should increase that much accordingly. And that's not how it actually works. It would come down to that EPS growth. And if they're able to grow EPS, you can grow revenue all you want to, but if your EPS is declining, that valuation is going down, not up, in regards to the multiple being paid for the stock. So that right there is a simple mistake that I know a lot of folks make. And when you're basing projections based upon that, it makes them, I won't call them ridiculous, but they're useless at that stage, because you're forgetting the most important parts about valuation and other metrics like that big Wall Street investors are absolutely looking at. I also don't think you should make crazy projections of, stock price is going to increase 25% a year or anything else like that. I like to be conservative. I want to always beat the market, of course, but I'm okay when I'm projecting. And I don't play the games like I'm going to project out 2030 and stuff like that. Nobody knows beyond a year or two. So I can reasonably project based upon what management told me was going to happen with EPS and numbers like that. But let's say you want to play the game anyways, and you want to project out to 2030, 2040, whatever number you want to project out to. I would just simply go, well, if they happen to beat the market every year, so take a 12% rate or so, where does the stock price go over the course of that time? Now, they obviously could underperform the market during that time. They obviously, if they turn into another NVIDIA or Apple or whatever the case is, they'll significantly outperform that number. But I'm not going to base the number of shares that I want to own and the amount that I want to own of a particular stock based upon those types of projections. I want to project something very, very reasonable, very, very conservative, and I'd rather own too many shares. And whenever we get to 2030, 2040, whatever timeline you're looking at, okay, great. If the stock happened to, I said 12%, the stock happened to do 18%, 20%, 25%, whatever crazy number you want to put out there, I'm sure it's not going to be glad that I had more shares than if I got out there and I projected out a 25% growth rate and it only got 12%. And so I bought shares based upon that 25% growth rate. Now I'm significantly short of those goals and that number that I need. So for me, that's how I choose to do that. And that was a mistake. A lot of these, actually every one of them made, was they were just projecting out numbers that for me were not conservative, or they were based upon something that was completely flawed to begin with, which of course makes those projections, as much as I hate projecting out that far, it makes them even less valid and less realistic and more not helpful than they should have been in the first place. But enough bagging on those videos. There were some great things with those videos as well, so I absolutely want to give credit where credit's due and discuss those points specifically next. So the first awesome thing was goal setting. Although I don't necessarily like the premise of the videos or, kind of the way it's positioned or whatever you want to call it, I absolutely love the fact that it's giving you a tangible goal to reach to. It is the beginnings of goal setting for your stocks. Now, there's a lot more to this. Your goals should serve larger goals. Your goals for a particular stock should serve much larger goals in your life and a lot of other things like that. But for most people, they don't set stock goals in the first place. So they have no idea. They're just buying to buy because I feel like I need to put my money in the market and I feel like this is the best stock for me at the time. And that's kind of it. And this right here shows you and kind of gives you that first step into setting goals for your stocks. It is so important to do that so that way you know where you're going. So when you do those projections like we just talked about, you have a number you're trying to get to. So you can tell specifically how many shares you actually need. If you don't have a goal, well, how do you know whether or not you need 1,000 shares or 10,000 shares at a reasonable growth rate in order to hit your goal? You can't know that in the first place without hitting a goal. Same thing with anything else. Saying I want to be rich is a terrible goal. Cool. Congratulations. What does that actually mean? To some people, that could mean $100,000. To other people, that's $20 million. And more importantly, if it's nothing that's defined there, you're never going to actually do things to actually try to hit that goal in the first place because it's not defined. So you won't know what to do. You have nothing to guide you there in the first place. So I love the fact that it introduces the concept of goal setting and setting a goal for yourself in regards to owning stocks. That is hugely positive, and it's something that is sorely missing out there, especially with us as retail investors. It is something we just don't do. And it should be the first thing you do before ever actually buying a stock, is setting that goal out there for that particular stock in the first place. And second, it shows the power of compounding. It kind of unlocks the secret to getting rich. It shows you that you don't need to take profits and play all these other stupid games that everybody out there likes to play. And instead, it shows you that just let compounding make you rich over the long run. So how do you actually get rich? Go talk to a rich person. How do they actually get rich? And they'll tell you by having your money compound for you. As you're growing a business, you hire out employees that compound your time so you can focus on high value things that make you the most amount of money or make the business the most amount of money, while they focus on the things that help take care of the business and also make the business more money. That's how you scale out a business. That's how you grow a business. That's how you grow out your wealth in the end, is by understanding compounding. And I kind of think of when I buy a stock, there's a management team attached to that stock being paid millions of dollars to compound my money for me over time. I should not have to do all the work to turn my, $100,000 into $500,000 into the future, or your $10,000 into $50,000 in the future. There's a management team there that is being paid to do that for you. That is how you get wealthy, not by individually trying to trade in and out, play all these other games and, do all these other ridiculous things, which by the way means you're going to underperform dead people. Compounding in the stock market is like having your own personal workers. And that's what I love about these videos, is it illustrates the power of compounding and how you don't have to do a whole lot to have a little bit of money turn into a lot of money in the future. Sure, I might not like the projections of turning 10,000 into a million, but it's not unreasonable to think over a 2-decade period or so that you can turn $10,000, really not do a whole heck of a lot with it, and have it be a nice chunk of change for you in the future. And if you're doing that repeatedly every year over time, that's how you become wealthy, not necessarily by your own efforts, but by your combined efforts of yourself. And then, of course, letting your money work for you and become like a worker for you, growing your wealth when you're sleeping, growing your wealth as you're doing other things to bring more money into your investing account. That's the beauty. And that's absolutely what I loved about these videos and what they introduced. Not a single one of them played games and trading and getting out of this and then taking profits here and skimming off here and then using that to do this. None of that. It was just buy and hold and let compounding do the rest for you. All right, so let's talk about the hard truth about all this. And it's very, very important that you guys understand this in regards to what I'm about to say next. And that is 1,000 shares is relative. Now, let me kind of explain this a little bit further because I know that doesn't make a whole heck of a lot of sense. So when I get asked what a full position is, I get asked that all the time in the comments, in my group, everywhere. What is a full position? And the best way to answer that is, for me, is the amount of money I'm willing to risk in a particular asset and still be able to sleep at night in the end. And that dollar amount, this is the reason why I say 1,000 shares or 100 shares or whatever the case is relative. The reason why I say that is because I have group members where, they basically, doing $1,000 DCA is a big deal. And having $10,000 in SOFI stock is a lot of money in SOFI stock. We have other members where they can do $100,000 in SOFI stock, and that's just a monthly DCA into the stock. Not a big deal at all. That's what I mean by relative. There is no one number. Everybody should own this amount of shares of this stock, or everybody should own this amount of shares of this stock. Totally irrelevant. Your situation is different and individual to you. Your risk tolerance is different and individual to you. Some folks are in that, situation where they make, $10 million a year. So spending $2 million in the stock market is not a big deal to them. It doesn't hurt their income. It doesn't do anything. They still have millions of dollars to invest other ways, as opposed to some folks getting $2 million to invest would be a dream. And they're hoping in 20 years, their portfolio is worth $2 million, much less being able to put $2 million to work in the stock market in the first place. So you can't really say that there's one number that everybody should do, even at lower income. I used an extreme example there to kind of illustrate the point, but hey, there's a big difference between somebody that makes $50,000 a year and somebody that makes $90,000 a year in terms of the amount of money they're able to put in the stock market and the amount of money they're able to risk in the stock market. And more importantly, what return they need and how much money they need in the future in order to actually be able to hit whatever their goals are, because everybody's goals are going to be different as well. So that's what I mean by it's relative, and it's a hard truth. These are great videos to get you thinking, to kind of get you moving in the right direction. But using that number as the right number, 1,000 shares, 100 shares, whatever, $10,000 worth of this stock, whatever the case is a flawed model to use. You need to tailor that to specifically your needs, your income, what you are doing specifically there. So that way a full position is relative to your situation, what you need, what your risk tolerance is, and everything else. Keep that in mind. Do not blindly follow these numbers that myself or anybody else puts out there in regards to that. You need to sit down and assess it for your situation and then move forward from there with some of the good things that we talked about that with in regards to these videos, but also, hopefully I gave you some things to think about as well that were not necessarily the best in regards to these videos. So that way you can kind of clean it up and make a better assessment there. And if you want help understanding all this more directly with me, make sure you take advantage of one of the biggest discounts ever for my group that expires this weekend, guys. It's getting ready to expire, where you get access to myself directly to help out with this. Your free coaching. You get 5 courses that delve all into this. You get access to the best 6, 7, and 8-figure Discord out there of members helping you understand all this. Plus, you get all my buy and sell alerts in real time, get my complete watch list with price targets. Guys, there is so much involved in the group. Make sure you check out a pinned comment and take advantage of the sale before it expires. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. Thanks for watching, and we'll see you in the next one.